So if you have gotten a text from the tax guys or IRAS or the Singapore taxman, you kind of know it's time to pay your taxes. And this period of time, many of us dread and probably do not enjoy it because it's money going out of our pockets. But today, let's talk about how we can legally reduce our taxes so that we can get more cash on hand for investing or buying whatever it is you are looking to buy. So in Singapore, we have a progressive tax system which starts at 0% and scales all the way to 22%. So when you hit the annual income of $320,000, that is where you'll get taxed on 22%. And yes, there is 0% taxes in Singapore if you earn less than $20,000. So this video is mainly for this year's taxes, which is for the year assessment of 2023. Basically, whatever you earn from 1st January 2022 all the way to December 31st, 2022 will be calculated and taxed in 2023, which usually happens in the month of April. So the tax system in Singapore works in brackets, and if you earn a certain amount, you are taxed on that bracket, and the excess is taxed on another bracket, if that makes sense. Unlike countries like the US where you are taxed based on the total amount that you earn. So for example, if you're earning an annual income of $50,000, right now, you'll be taxed at a 7% tax bracket. So for the first $40,000, you'll pay $550, and the remaining $10,000 is taxed at a 7% rate, which comes up to roughly $700. So your total payable tax will be $550 plus $700, which comes up to $1,250. But in the US, this is very different because they tax you based on your income. So at the annual income of $50,000 in the US, you'll be paying 22% of taxes because you fall into the bracket of $41,776 to $89,075. And on a tax bracket, this means that the taxes you need to pay is roughly $12,000.
That hurt a lot.
So there's quite a huge difference here between Singapore and the US, but basically what you need to understand is how both these systems works and how different they are. So come tax season in April, what you need to do is to log into your IRAS and check your taxable income and ensure that you have gotten the reliefs that you should get or you are entitled to. And more often than not, your company does the auto filing for you, just like mine. So the taxes are automatically calculated for you, which means you don't have to go through the whole process of looking through last year's income statements. So in Singapore, there are many tax reliefs that you can get, and there's a whole long list of them. So there's earned income relief, which is a relief if you're earning an income. This is automatically calculated by IRAS if you're employed. And then you have the spouse handicap relief, you have the foreign domestic worker relief, you have CPF relief, you have CPF relief for self-employed if you're self-employed and you contribute CPF on your own. And there's also NS relief for NS men, you have NS relief for the wife, you have NS men relief for the parents as well. So guys, if you are contributing to the nation, you will definitely get some tax reliefs, so please serve your national service. So on top of that, we still have other reliefs here. We have the parent handicap relief, we have the grandparent caregiver relief, we have the handicapped child relief, we have working mom relief, and we have the handicapped sibling relief as well. And on top of that, there is even more reliefs for insurance. You have for causes, SRS top-up, CPF top-up, and CPF relief if you top up your MediSave. With so many reliefs available, we might not qualify for all of them, but for the more common ones that we'll get automatically are CPF relief, NSME relief, and earned income. So all these are automatically calculated for you based on your employment status. And maybe for the guys that are watching, we got a slight advantage here because we did our national service for 2 years. We get $1,500 in tax relief from the day that we complete our national service until the day we leave this earth. But if you have done your reservist during that year, you automatically get another additional $1,500 of relief, giving you a total of $3,000 in tax relief. So for the ladies, you are not forgotten. So as long as you are married to a Singaporean man who is eligible for the NS self-relief, you'll receive $750 in tax relief as well. So here are some examples. So let's say if last year Jorden earns $50,000, and using the IRAS calculator that IRAS provides, we can key in some details here to get the estimate on the tax relief that we receive for that year. So in the Excel sheet, we'll key in $50,000 as the employment income. So for donation portion, since we get a fee taken out of our salary every single month, this comes up to something around $100 a year. So now we see that our taxable income is at $49,900, which puts us at the 7% tax bracket. So next, what we need to do is to deduct earned income relief, which is at $1,000. And again, this is automatically computed on IRAS end. And then we have the CPF relief, which is the amount that you have contributed to CPF. So based on $50,000, this means that 20% of the contributed CPF will be deducted from our taxable income, which is $10,000. So now things are looking a lot better because our taxable income has dropped from $49,900 to $38,900. And let's say maybe you are a guy and you completed your reservist last year, so this knocks off another $3,000, which means that our taxable income right now is at $35,900. So based on the calculator, the taxes that we have to pay for this year will be $406.50. So it's not too much, it's pretty okay, and this amount can be spread over the next 6 months or 12 months paid in installment to IRAS. So all these tax relief seems really good right now, but there are some other reliefs that we can tap on, which is the insurance relief, the cost fee relief, CPF top-up relief, and SRS relief. So if you have your own insurance and you are paying for it, you can go to the IRAS website to indicate the type of insurance that you are paying for, and those will be computed into your reliefs if it qualifies for the segment. But do note that there are some insurance policies like accident insurance, hospitalization, health insurance like MediShield, integrated shield plans, disability like Elder Shield, Care Shield, riders for life insurance, critical illness, and endowment do not qualify for the insurance relief. And then we got a cost fee relief as well that can give you reliefs up to $5,500 if the course, seminar, or conference is relevant to your current employment, trade, business, profession, or vocation. But if the course is something for like recreation, leisure, and hobbies, general knowledge, skills, those will not qualify for the relief. So next we got CPF top-up, which is kind of interesting because if you top up your CPF, the max relief that you'll receive is $8,000. And anything that you do above $8,000 will still be at $8,000 cap. So this is pretty interesting if you want to reduce your taxes. Contributing to your CPF could be something to do. So by topping up your SRS account, you get a $1-to-$1 match in tax relief. But do note that SRS has a limit of $15,300 in contributions per year for Singapore citizens and $35,700 for foreigners. So if you have topped up your SRS account with $5,000 in 2022, then the current year's taxable income will be reduced by $5,000. So if you open up the tax calculator once again, and let's say we got our insurance included of maybe $1,000, a course that we took costing maybe $3,000, and maybe we top up our CPF with $2,000, and our taxable income using the same example as before will be as follows. So your earned income will be $50,000 from employment income, $100 in donation, $1,000 in earned income relief, $10,000 in CPF relief, $1,000 in insurance relief, $3,000 in cost relief, and $2,000 in CPF top-up. So this brings our taxable income from $35,900 to $29,900, which means that we'll be taxed at a 2% bracket, and our payable taxes here is right now at $198. So this is almost a 50% less than the $406.50 that we were paying previously, but this is only just an example, and the best way to do this is to try out the calculator that IRAS has provided, put in some numbers to see what ways you can reduce your taxes for the following year, because the one for 2023 is already over and it's probably a good time to prepare for 2024. So there's a lot of information here to digest, but to quickly sum it up, there's a few things that you can do to reduce your taxes. The first few things you can do is to donate to an IPC or Institute of Public Character, which is a registered charity to get 250% of your donation in tax relief. And then you can update your insurance premium information on the IRAS website. You can update the courses, seminars, or conferences that you have paid for on the IRAS website as well. Or you could top up your CPF to get up to $8,000 in relief. And lastly, you can top up your SRS account to get up to $15,300 in tax relief as well. So ideally, if you have a rough gauge of what your tax bracket is gonna be like, you can strategize and plan how much relief you'll need to not jump into the next tax bracket, which can significantly increase the taxes that you have to pay for that year. So I do hope that this video has given you some info on how you can pay less taxes. If you haven't, I would greatly appreciate if you can drop a like, subscribe if you haven't, and as always, stay safe, invest safe, and I'll see you in the next one.